$6 trillion. Yes, you heard that right. $6 trillion added to big tech market value in just a few years, all thanks to AI. But here's the question. Are we witnessing the next tech bubble, or is this just the start of something massive? Today, we're breaking it down. Microsoft, Alphabet, Amazon, and Meta are all reporting strong revenue growth. We're talking billions each quarter, and these four alone are projected to spend $400 billion this year just on AI infrastructure. But here's the kicker. Only 5% of AI projects are actually delivering measurable results. That's from a recent MIT study. The rest all at the pilot stage. So billions in spending, trillions in market value, but is most of this hype rather than real profit? Let's dig deeper. Now it gets messy. Some of the biggest players are funding each other. NVIDIA might invest $100 billion into OpenAI, one of its largest customers. OpenAI has signed $1 trillion in AI compute deals, including $300 billion with Oracle. Meta even borrowed $27 billion in private credit for its data centers. Experts warn when companies are both funding and relying on each other, decisions aren't always about real demand. They're about keeping the hype alive. Sound familiar? That's basically .com era 2.0, and it could spell trouble if things get out of hand. Some of the smartest people in AI are raising red flags. Andre Karpathy, co-founder of OpenAI, calls today's AI models slop, saying the industry is overhyping what's actually happening. And then there's Julian Guerin, a macro strategist who says this AI bubble is 17 times bigger than the .com crash. He argues most AI companies outside the chip makers aren't profitable and rely on constant capital infusions. So if you're thinking this is just another tech revolution, think again. Some of the experts believe this could be the biggest bubble the world has ever seen. But it's not all doom and gloom. Cloud revenues are growing fast. Microsoft Azure plus 38%, Google Cloud plus 30%, and AWS plus 18%. Big tech leaders like Jeff Bezos call this more of an industrial bubble than a financial one, arguing that even if valuations are high, society benefits from all the innovation and infrastructure being built. So maybe the bubble isn't going to burst spectacularly like in 2000. It might just grow pains while building real tech foundations. The question is, will profits ever catch up to valuations, or is the hype too big to sustain? Investors aren't standing still. Some are hedging, moving away from hype stocks and diversifying into energy, industrial suppliers, or overseas tech companies. Others are betting on AI adoption eventually catching up with expectations. Essentially, some are preparing for a correction, while others are riding the wave, knowing that in tech, timing is everything. So are we in an AI bubble? Signs point to an inflated valuation, hype, and risky circular deals. But unlike the .com era, there's real technological progress happening. The truth? This could be a bubble, or it could be the foundation for the next industrial revolution. One thing's for sure, watch the gap between hype and real returns very carefully. And if you think you're too late to the AI game, remember, in tech, bubbles can pop, but the winners still emerge. If you enjoyed this breakdown, hit that like button, subscribe, and click the bell so you don't miss the next deep dive into AI tech and market trends. Let me know in the comments, are we in a bubble or building the future?